Hey folks, I'm James. Welcome to today's video. I'm going to start with natural gas today because that's what everyone's trading. And it's the last trade we took on Friday actually. So we shorted natural gas right at the red arrow on this chart. Now, if you've been following me for a while, you'll know that I've got these ideas in mind. First of all, the green path, which we tried, may have failed now. Then we've got the orange one and the red one. We're still holding the trend line and this little gap here in the 100 period moving average on the day chart, but just seeing a bit of a pullback late on Friday actually. And then potentially setting up for one of these two paths to carry on with. The orange path could take us down to $2.80 and the red one down to $2.50. And of course, we've got the $3 level, this very key level here, this top black line. So 3 levels of support. We're currently trading at 3.3. So even if we just get to $3 and then bounce and then resume the uptrend, we'll have made a little bit of a profit on that downtrend too. The COT report and the storage reports aren't all together very clear what the next move is going to be. But simply based on price action on Friday, let's go back and have a look at that. This 4-hour turnover or rollover following this double top. Now we sort of got out of our short trade. We went short there and we got out a little bit later on and then just shorted again there. More actually based on the hour chart. And if you look at the hour chart, you can see quite a nice rejection here at that double top with quite a nice doji rejection candle followed by a spike low. So that's a classic one up, one down reversal candle. It's not on the 4-hour chart, granted the chart that I normally look at, but it gives us a little bit of a clue by zooming in closer to the 1-hour chart. So there we are. We're still at an order block and still at the support level. And we've got the potential weekend gap coming up. So we'll see how we go. On the hour chart, if you trade this off the hour chart, like many people do, I trade off the 4-hour chart as my sort of minimum time period. But if you're trading this on the hour chart, you will have noticed that we've actually closed beneath that support level on 3 occasions now, 3 separate hours. So that means technically support at 3.3 roughly has been broken, even though we're trading still at 3.3. We haven't sort of bounced back up through it. Let's go back to the 4-hour chart. I'm more familiar with the 4-hour charts. You can see there as well, quite a nice rejection, certainly a double top. You might even consider that to be a triple top if we consider this last peak over here. And the last 4-hour candle prior to closing on Friday was a big bearish reversal candle, just getting back down to that trend line though, and the 20 period moving average. And that's where we are now. So we're going to have to wait for this market to open up in a few hours time and see where we go. First target $3, maybe $3.05, and then 285 to 280. And then below that, we've got the 250 level, which is actually the key dividing line between the bulls and the bears. Now notice that if we go back to the day chart, and I'll just zoom out a wee bit, and you can see that this red path takes us down to 250 towards the top of the triangle apex and the Fibonacci retracement level. That's the 61.8% fib level. So we can potentially get down there and still remain in a bullish trend. Notice that the trend line is bullish. It's moving upwards. So we'd still be in an upward trend if we got down to $2.50, and certainly if we bounced off $3. And I think this weekend opening in a few hours' time will tell us quite a lot about what might happen next. If we gap down, we should probably head further down towards about $3. But if we gap up, we may have negated that reversal altogether, and we may have to move back up to the top of let's have a quick look while we're here, back up to this top trend line, and we could have a breakout, pullback, and then a reversal following that. So if I extrapolate this green line out, let's just take this one off and put another one here. So if let's say we gapped up to the 20 period moving average to about, 3.45, 3.5, something like this, we could expect maybe one more test of that trend line from underneath the higher up trend line, and then a pullback down to where the orange arrow is actually. So quite an interesting setup. I'm going to change this to green just to not be confusing. So that's where we are right now actually. And what I'm going to do is drag this orange arrow across just to align it with where we are currently, because I had drawn that in prior to this. And there we are. We're at the sort of apex of these two lines. Potential green path going up, potential orange path going down. We've chosen the orange path. Perhaps we'll get down to $3 first of all, the bottom of this black line, and then the rising trend line from underneath. So all up for grabs right now. We've taken a position, taken a side. But if we gap up, we'll have to reverse, hedge, and start looking towards the upside again, and then potentially watching this very key level, and that'll be at about 4.2, somewhere around there, perhaps even back up to the high. So all up for grabs, and we were watching that very closely. So we got out of our WTI short trade right down here. We got in at the top there, and it's really too long and too neat. We've got the moving averages for a potential moving average reversion trade back up here. We're not going long though. We remain short, and I'll be looking for opportunities to add back into the short trade, probably at around about $74.20, maybe back up to $75. We'd still be in a downtrend even upon those retracements, looking for a move back down to where we are currently at about $70, and a break below $70 will take us down to this ledge, which I've been talking about for quite a long time, which I've now given a name, Moab, mother of all breaks. And if we break below that level, then we should see a move down towards the bottom of the channel. And let me try and show you where that might be. It's a bit difficult with all this stuff on the left. But somewhere down here, as you can see, down to the channel bottom at about, I don't know, 58, 60, somewhere around there. A bounce back up to Moab, and then a continuation back down to the channel bottom again. And that could take us into the low 50s eventually, and then perhaps into the 40s and even the 30s. That sounds a bit crazy right now. We've been trading well above $70, 70, 80, 90 for so long that these cheaper prices for a barrel of oil seem ridiculous right now. But that is what we should expect, lower oil prices going forward. So the same thing with Brent Crude, following roughly the same path, just a little bit more expensive than WTI. That's understandable, of course, given the Brent Crude price in Europe and so on, and WTI in the US. So then we've got uranium. We're long on both of these. Not much to add, really, just bumping along the bottom here, looking for a rally in uranium, holding onto our long positions. And you can see where those are situated, these green arrows. And I'll update more on uranium as time goes on, and if and when we break out of this very consolidated range, currently where we are at the moment. Let's go to currencies. So here's the dollar index, just to really cover this very briefly. I put something up on X on the pound this morning. Have a look at that. And if you're not following me on X, the handle is ArcisFX, just ArcisFX on X. And I put trades up there almost every day, trade ideas that don't always make their way onto YouTube. So this is the dollar index, and I've showed you this pattern many times before. It's a classic technical pattern, long-term trend line going back to October 24. We broke down below that trend line, retraced back to the underside of it, pierced through the top Bollinger Band, and rejected from there, and now heading down. I expect we'll bounce along here for a little bit longer to go, but I think eventually we'll break down through this flat bottom. It's not quite flat, but it's getting there, and then a move down into lower levels. First target about 105.40, but I think we could get much lower on this one, get right back down to the bottom of this range, back down to what I call parity, where the dollar index is at 100. So that could take us all the way back down there. It's not going to be overnight. Perhaps something like this move down, or something like this move down. And that would typically take about 2 to 3 months to occur. So from where we are now, if we extrapolate that out, we'd be looking at somewhere around sort of March, April, about April, May, somewhere around there. If at all, if we do get down there, I'm not saying we will necessarily. I think we will. Somewhere around, May this year. So that's the dollar index. And of course, if the dollar index falls, we'll see a rally in the euro and the pound. My two favorites right now are the pound and actually the dollar yen, which has been falling quite dramatically. We've been short on this the whole time. Let's start with the pound. And I put this up on X this morning, and I think it's an interesting chart. This is the day chart on the pound. And a couple of things, I've actually taken all the notes off. So go across to X, you can see I put some annotations on here, some arrows and some labels. But essentially we broke up through that long-term downward sloping trend line quite recently. It's a very, very long-term trend line. If I can just squeeze this chart across, you'll see where it comes from. So miles and miles back, going back to at least 2014, somewhere around there. It's a very, very, very long-term trend line. We broke up through it and then immediately fell back down inside. And we've now broken through the bottom trend line, this one over here, which is about a year, maybe 2 years old. Let's see how far that goes back. Yeah, 2023. So we broke out through there. That turned out to be a false break. We've now broken out through the bottom. Will that turn out to be a false break too? I think so. If the dollar index does actually start dropping, this will continue to rally. And notice if we zoom in, we've got a very similar pattern to the dollar index. There's a long-term trend line. It's also in purple. A breakout through the top. Bit of a bouncing around, a bit of a scare there, but dropping back in, but still closing above the trend line. And now, over the last week, we had a pullback to the 20-period moving average and the trend line top. So it's a breakout of the downward sloping trend line through the top, a pullback down to that trend line, and then we're now attempting to bounce. Also notice that we're above the 20-period moving average, bouncing off that beautifully at the same time, which is now curling up. But we're below the 50, that's this red one, and we're stuck. We're trapped right in the middle between the 20 and the 50. Which one will win? I think basically looking at this pattern with the false breakout at the top, potential false breakout at the bottom, and this downward sloping trend line that we've now broken out of, pulled back to and bounced off 2 days in a row, I think the top 50 period moving average is going to be the one that gives way, and we should see a rally. We've got to get back above this trend line, of course, before this is all confirmed. And so over the next few days, we should see an attempt, at least to the underside of the trend line, and then a bust up through there, and eventually above the long-term downward sloping trend line, and that'll take us up into these order blocks up here, and maybe the top Bollinger Band again. So that's the pound generally, long on the pound, long on the euro. We've got positions on both of those, and short the dollar yen. The dollar yen, I'm looking for a bit of a bounce. It's been also a little bit too long and too neat. I'm looking for a bounce back up to this orange line, or the trend line, somewhere around here, maybe these two moving averages. We're currently trading at 151.37, and seeing as I've taken some profit on this, I don't have enough size on it really for a trade which I think is going to turn out to be a good one. So I hope this does actually bounce back up and give us a chance to get some more shorts onto this one. Otherwise, we'll just carry on moving down. We've still got about 55 to 60% of our position on this. It's not 100%, but it's still something relatively substantial, and looking for a move much further down. Once again, I think the dollar yen could get into much, much lower levels, and I'm talking about 140s, 130s, and then eventually 120s. This currency pair has been trading historically around about the 115 to 125 level, and we're currently at 150, so still well above the historical norm or mean for this currency pair. So that's the overall target, and that could take a whole year to get there, of course. Now, going across the stocks, well, we're short, as you know. We took no positions on Friday, and market's still trapped within this triangle and within the options walls. We've got a call wall at the top, we've got a put wall at the bottom, and we're still stuck in between. Same thing on the S&P, but we've got short positions on this one so far already, just moving into some profit on those. And if that carries on moving down, I expect we'll see some of these blobs down here come into play. The 200 period moving average, this order block, and this rising trend line, very, very long-term rising trend line, channel line, if you want. That's all the way down closer to 20,000. So let's see how we go. We're currently trading at 21.5, so that would be a good move down. And from the top, that's roughly 10%, which is sort of what I expect we should get in terms of a pullback, at least that much, maybe some more. I don't know. Also notice here's the channel center line, this dotted line in the middle here. And we're just above the channel center line and the 20 and the 50 period moving averages right here, right on top of them. The 50 is pretty key. That really defines, in simple terms, the difference between an uptrend and a downtrend. So we're really just diddling in the middle still at the moment. It's a term I picked up from Trader TV Live. So all of these blobs that I've got drawn in here, we'll have to move them along a little bit because time has moved along. But you can see the sort of levels, order block. Actually, this one can probably be deleted because we've sort of moved away from that. So let's just move this one along. And that order block now matches the bottom of the channel line. And then we've got this blob at the top here, which we can also move along. And perhaps put that up there somewhere just above that one there. So in terms of time, roughly equal. So two potential blobs. And I really don't know which one is going to happen. But we remain short on the NASDAQ, hoping for a move down for at least a 10 to 15% correction. Same sort of thing on S&P, really, just, call wall at the top and a put wall at the bottom, and we're stuck in that range. Notice how we've got lower highs on these spikes up here, so if anything, it's looking a bit bearish. We don't see the same lower highs so much on the NASDAQ. That one's a little higher. Friday's was slightly higher than the previous one, but certainly here on the S&P, each time we make a spike, it's slightly lower than the previous one. You could say the same about the bottom as well, lots of spikes, but not making higher or lower lows, roughly sort of equal down here. So stuck in that sort of call wall block zone, and we'll have to see how we go. And all sorts of theories swimming around about NASDAQ, S&P stocks, rotation into banking and consumables, consumer goods and that sort of thing, out of tech, back into tech. And we've got problems with Tesla, talking about Tesla in China, Elon Musk and all of his peculiarities, putting the mockers on Tesla, really. We're long on Tesla, expecting perhaps we could move much further down, closer to 300 if this fails here. But we've taken another tranche right at the bottom after that spike low. Let me just zoom in there very quickly on Tesla and just show you that we've broken down below the low of that sort of doji reversal candle. It's a hesitation candle, really, not a doji reversal, but we did close below it. So it's basically a bearish engulfing candle. So not looking good for Tesla, but you never know. We're looking for a bounce on that, but if it doesn't bounce, we'll either hedge or add a little bit more closer down to about 330, something like that. I don't know. Haven't quite decided. Let's see how the market opens up tonight. We're also short on NVIDIA. And what I do like about NVIDIA is that we're still trapped underneath this gap, the 20-period moving average, and the top of this sort of gap here. But what I like here, and I'll show you this on Bitcoin as well shortly, is this hammer candle. Now, normally people would say that that looks kind of bullish, but it's actually a hammer candle is actually a bearish reversal candle. And when we see this at the bottom of a trend, inverted, which I'll show you on Bitcoin right now, it's actually bullish. So I'm not too sure that's a bullish candle. And we may actually see that this is actually a turning point in NVIDIA and that will move down further from here. If we get a chance, I'll try and add some more on here early in the game on Monday when the market opens up, and try and get another short somewhere around about, I don't know, $130, but perhaps even slightly higher at about 134, just around about those moving averages and that swing low there. Be watching NVIDIA very closely. Awful lot of people bullish about NVIDIA. I'm not terribly convinced. We have got nothing on MSTR. We're long on Coinbase. All of these just sort of coming off on Friday. Same with Apple, also just coming off a little bit there. But holding in, within that block range there. We've got a long position from down here near the 200-period moving average. So unless tech picks up a little bit of steam, gets a bit of a wiggle on, it's all looking a bit sort of flaccid and weak. I think we're pretty much hedged. So we're short on the NASDAQ, potentially looking for an additional short to add onto the S&P, but and short NVIDIA, but we're also long on Coin, Apple, and Tesla. So you could say we're pretty much hedged on stocks right now. You never know. We might get a bounce on Tesla, Apple, and Coin, whilst the NASDAQ and the S&P move down. We did see that a couple of weeks ago too. Alternatively, we could see everything just moving up, in which case our longs on Tesla, Apple, and Coin will hedge any losses that we incur on the NASDAQ or the S&P if we get into that one too. Now, quickly going across to Bitcoin, Ethereum, and XRP, Ripple. Well, we're long on all of these, as you know. And really nothing's changed. We're stuck in this range. I'm not really a crypto purist or obsessive, but I do trade these quite extensively. In fact, it's been my best trade recently, Bitcoin longs, and we're hoping for this to carry on moving up. My target for Bitcoin is about $140,000 to $180,000 per coin, but we've got to get out of here. I do like this spike low. Once again, lots of spike lows, holding that level, very much in a sideways range. We've got a couple of trend lines which are supporting, and this moving average, the 100-period moving average. So far it all looks quite good, but we are still just stuck in a range. And whilst we're below roughly 100 and then 106, these two lines here, that one and that one, we've got to close above each one of these in order to get this going up and being bullish. Let's get above 100 and close above 100 and the 20-period moving average first. And then we need to close for the first time ever above 106,000. It's a level that I pointed out months ago over here somewhere in December, actually. If you remember, I put this up on X. I said we've got to close above 106,000. When we got there again, multiple, maybe 10 days in a row we tried. Didn't get through there. Everyone got kind of bearish and morose about Bitcoin, and a lot of people started shorting it. So good on those who got out, who shorted and got out on that spike. A lot of people added more longs and got taken out by that spike. I just did basically nothing, adding a little bit more, one more tranche on that spike low. We're long on XRP. I do like the way this is holding, but despite these big spikes down, they all basically held their trend lines or support lines. So there's the XRP support trend line, which despite the spike down has held. You might say, well, it's all very well saying despite the spike down, that's where I got stopped out. But it's a spike. That's what spikes are meant to do. Same thing on Ethereum. And I kind of like the way these have spiked. I mean, that's a massive, huge spike on Ethereum. We did not close beneath the channel line though. So it's pretty supportive. And if you like bullish and bearish flag type patterns, this is pretty classic. We need to get back up to the top of the flag and then break up through there and close above that line. That's the key line for Ethereum. So we've still got long positions on all three of these, and I'm happy with that. We did, however, get out of our long gold and long silver trades on Friday, right at the top. I actually thought these might carry on moving up and leave us behind, and I was a little bit relieved to see that they actually turned around late on Friday and started moving down. I'm very, very grateful that we got the top and didn't get stuck and left behind, and with Bitcoin, gold rallying to 3,000, 3,200, and silver going up to 40 or something like that and leaving us behind. We've now got a chance to get back into both of these on 4-hour reversal patterns at support levels, following the principles of my trading systems. And then palladium, we're out of our platinum trade. We were in long platinum, where palladium trade is also looking a bit weak and sick. But once again, I'm just going to redraw this line because I can. It's my line, and I'm just going to do what I want with it. And so I'm going to retain that cup and handle pattern. It's really a bit of a stretch to call this a cup and handle, but it makes sense. Anything that you can put in your charts that kind of makes sense to you and helps you visualize and patternize and gamify your charts is always helpful. And that's why I like to have, it looks a bit rude actually, but let's call it a cup and handle. And that's what I expect. I expect to set, palladium to move up. My targets for palladium are, first of all, a close above the red line here, and this is at about 12.18. We'll probably take some profit or hedge right there, but I think we could get up to about 1600, and that's a very, very important and key level on palladium, as you can see when I zoom out of this day chart on palladium. Let's get up to about 1200 to start with, and then maybe 16. But if we can get up to 1200, it's looking like it's really struggling, but these things take time. And if we can get up there, we'll either hedge, take profit, maybe partially hedge, something like that, and then look for a move back up to 1600 after that. Now, if you're following South African politics and US politics to any degree, before I go into the US 10 and TLT, you'll be aware of this furore that's going on between Donald Trump, perhaps Elon Musk most probably, and the South African government about the land grabbing law that's just come into place in South Africa. In South Africa now, the government is entitled to take any property, not just land, but any property without compensation for any reason that they deem to be in the public good. And Donald Trump very promptly put out a verbal himself saying that there will be withholding of certain types of assistance to South Africa, including the couple of specific things to South Africa. Don't want to go into it all right now, but also he's made an implication that South African farmers, Afrikaans speaking particularly, might be granted refugee status in the US. I'm following this very closely. It could mean potentially that several 100,000 farmers or just young, skilled, talented South Africans leave this country and go and live in the US. Now, it's all a bit up in the air and far-fetched and weird and freaky. Everyone's freaking out right now. But I would have thought, at the very least, that there would be some pressure on the rand. But actually, and this all took place after the close of trade on Friday, very, very late on Friday. So what's going to happen to the South African rand against the US dollar? If this chart goes up, it means the rand's getting weaker. If this chart goes down, it means the rand's getting stronger. We're stuck under this very, very long-term channel line. Let me just quickly change this to a weekly chart and reset the price scale. So we're stuck under this red channel line, and we've got the green, much longer term channel line bottom below us down there. This is what I thought would happen, and we were short for a while from that level there down to around about this black line, and we've exited those shorts because the rand started to weaken again. Not recently, not because of the Donald Trump thing in the US. This is in November, around the election time. Maybe there was some, words being said around about that time. I don't know. But the rand suddenly started to weaken again after starting off quite promisingly with this government of national unity that's just been elected into place, somewhat government of national unity. And the rand saw some hope in that until about November, around about the US election time, and then bounced up. And then we've seen it in recent weeks. But the last week has actually strengthened. The rand's actually strengthened. This chart's moved down. It'll be very interesting to see what happens early in the Japanese session on Sunday night, and whether this will have gapped dramatically up or down or not changed, depending on how the market has thought about and digested this Donald Trump aid being withheld from South Africa, and also Afrikaans, South Africans being offered refugee status in the US. Now, it's all very airy-fairy right now. Nothing's very clear about any of it. What will be withheld, what won't be, who's going to be invited to the US, if anyone, as refugees, we don't know. But it's an interesting one to keep an eye on. And so far, until we see the opening gap, if there is one on the weekend, this has held up pretty well. The rand's held up pretty well. This chart has not blown through the top. Now, US 10-year and commensurately TLT, we've got a little bit of a move up. Expected, of course, back up to the 50-period moving average, but we've broken down through the second level trend line, second gradient trend line. That's all good for the downward move. We're below the 50 and the 20-period moving averages. The next target should be down at about 4.31%, but expect a bit of chopping and toing and froing. We've seen some weird stuff with the jobs reports, jobs numbers, some good, some bad. Unemployment came down, but jobs creation wasn't quite as good. Non-farm payrolls was a bit of a damp squib. And coming up next week on Wednesday, we've got US CPI, and Jerome Powell is going to be talking to his children, not once, but twice. So watch out for Tuesday, Wednesday, Thursday. We've got Jerome Powell, CPI, Jerome Powell again. And we'll see what's going on with that. But because the jobs reports were a little bit mixed up, then we had some adjustments from previous months, which didn't make sense. The market didn't know quite how to digest this. And the US 10-year yield and all the other yields bounced around a bit and really went nowhere after all of that. So pretty much of a flat week eventually, moving down and then moving back up again, but just to the 50-period moving average. You can see the same thing on TLT, but we do have a little inverse head and shoulders pattern here, which is kind of nice. And I'm going to draw this inverse head and shoulders in for you very roughly, something like that. And one has to be a little creative with these things. So something like that. And then I think we could get back up to the 200-period moving average up here somewhere. There's the 100, maybe up into this gap, maybe up to the top of this level here. And that would require the US 10-year to continue moving down in order for TLT to move up. I do like the gap up through the neckline of this head and shoulders. As you can see, let me zoom in. Tuesday, Wednesday was it last week? So there's the neckline. We gapped up through it, and it's a nice positive gap. So that's kind of good for TLT. And I think if that sort of holds, we should see the US 10-year carry on moving down and get down towards these levels a little bit lower down. 4.3 and perhaps even 4.15. Right, going across the softs and grains, we're about to unhedge our cocoa trade, probably on Monday. Looking for this there's our hedge level. As you can see, I've drawn it in orange. And we just touched it. We sort of bounced off it, formed a little hesitation doji candle there. We should have shorted it here or removed our hedge or added some shorts. When I called this out as an island pattern, normally an island will have a gap up, a cluster of candles, and then a gap down. We had the bullish candle, gap up, cluster of candles. We didn't get the gap down, but really I should have spotted that and said, well, that's good enough. We moved down through the gap and then carried on moving down. I could have unhedged there, but I didn't. Nevertheless, we can wait to see what happens here. That's our hedge level. And somehow, sometime next week, I'll have to unhedge this and potentially add some short positions onto this trade for us to continue this ride down. And then we've got the big megaphone pattern, as you know, and a projected path, something like that. You can see I had that projected path drawn in here about 2 or 3 weeks ago. We didn't quite follow it, but not too far off, actually. And so we're down more or less, we've ended up in more or less the place that I thought we might get to. So we could get a little bit of bounce around here. Let's wait and see what happens. I'm not going to rush to unhedge this because it could bounce around a little bit as I've indicated by my diagram there. Let's just go through the others quickly. We're long on sugar, broken up through that channel, back into the channel, testing the top side from inside the channel, looking pretty good. Coffee, we're actually now unhedged. And we took another short right at the trend line. This is another example, folks, of that breakout pullback we saw it on the dollar index. So there's the trend line, the breakdown, pull back to the underside, and a rejection. On Thursday, we saw a beautiful rejection candle. We took another short there. On Friday, unfortunately, we just pushed back up a little bit and maybe made a slightly higher high, fractionally higher, but coming off a little bit towards the end of the day. So if we break up above this level here at about 411 and close above there, I'll have to re-hedge this one for the second time. So there we go. We're no positions on corn. We've been long, and up until we got out there, we were long at the green arrow, got out there, looking for a pullback. We could have got long again there, but I think we could get back down to the trend line. We'll be looking to add some more long positions onto corn. We're long on soya. I pointed this out. I'll put the last video up on here again for you to have a look at. We've got 3 tranches long on soya. That's looking pretty good. We didn't take any profit there. We could have, I suppose, but let's wait to see what happens if we break up through the top there. I think this has got some VUMA in it. We're also long on wheat. You can see our long positions, our 2 tranches there, one there and one there. We're in profit on both of those. We're short on orange juice. We have 1 position on orange juice. It's a fairly healthy position. Short there. Let's zoom into this one. It's a good example, again, of a very, very nice technical trade. So we've got 2 trend lines, a shorter term trend line, which we broke down below, retested, tried to get back above it, failed there. Big bearish engulfing candle, sent us lower. Down through the ledge, which I pointed out in previous videos was really important, and then down through this longer term trend line, which goes much, much further back. In fact, it goes back all the way to 2022. So an incredibly long and important trend line. And we've now broken down through that, back down to this level here, and we'll have to see what happens. We haven't quite got there yet. at around about 420, we'll take some profit off there, or hedge, or something like that, but certainly take some action when we get there. That's a really important and key support level, and I think we'll probably bounce there, so we may hedge the entire amount. We're also long on cotton, and we took another position here right at the bottom. We had a wee false break. We saw this on soya as well, a wee false break through the bottom. We have a long position from over there. We have a long position from over there, and we now have another long position over here. These are not massive positions. I'm busy building a long position on cotton, and slowly but surely, as this market starts to move up, it's incredibly cheap right now, and we squeezed into this corner. It's a falling triangle, but you could call that a falling wedge too. If I draw another line underneath there, something like this, you can see we've got a falling wedge pattern here, which is a bullish reversal pattern, and at some point, if I was to estimate this, we'll break out through the top of the wedge, probably back up to there, and then once again, I'm doing this with my mouse pad. Not too bad, I'm getting better at this. Something like that. We'll probably hesitate at that level, certainly there as well. Big support and resistance level going back some time, and then eventually we should go up. Cotton's really, really cheap, so the cotton farmers, and I know a lot about cotton. I used to buy and sell cotton 30 years ago all over the world, so I know quite a lot about this market. So really, really cheap, looking for a decent and dramatic move up. These falling wedges, like we see on cotton over here, often create a very violent and dramatic move when they do break. This is one of my favorite patterns, actually, and so the breakout through that falling wedge is likely to be fairly explosive. Well, that's it, folks. I hope you have a fantastic trading day. We're waiting for the markets to open up. Let's quickly look at crypto, which is currently trading live, and you can see we're just holding those levels. I wanted to point out one more thing on Bitcoin, which I neglected and I was going to tell you about, which I clean forgot to do, is the last number of candles on the day chart here. We've got an inverse hammer, followed by an inverse hammer, followed by a star doji. That was Saturday. And today, we're forming yet another star doji. Today's got several hours to go still, so who knows how this day will finish off. But these are bullish reversal candles. When people look at these attempts higher, these doji wicks above us, they automatically think that this is a bearish reversal candle pattern. Quite the opposite. These are very bullish candle patterns. It's an inverse hammer at the bottom of a trend, and you'll know that if you've been trading with me some time, that at the bottom of a trend, when you see an inverse hammer candle, particularly followed by a spike low below that, in other words, a one up, one down at the bottom of a trend, it's always a potential for a reversal. And so we're seeing that on Bitcoin. We've got two inverse hammer candles, a star doji and another star doji today. In my opinion, that's a pretty bullish pattern, and I'm looking forward to seeing this move up. Maybe even today, but certainly next week, looking for a decent and strong move up. We've had a whole week of consolidation at this level. I think it could be a pretty good one going into the next week coming up. Remember, natural gas will open up in a few hours' time, and we'll see whether this market gaps up or gaps down. I don't think there's any real geopolitics that might affect this, but some of the weather patterns over the weekend and any changes in the forecast for the next weeks that lie ahead will affect this as well. I think we've got a good chance of this moving down, but if this does gap up, we'll probably hedge and wait for this sort of green arrow to materialize. So we've got all sorts of arrows on here. One of these paths to work out, we've chosen for now, I think the orange path until we get to $3 and then $2.85. And if that doesn't work out, we'll have to assume that the green path might be the one to work out. So that's all I've got to say about natural gas for now. Have a fantastic weekend. And if you have any comments or questions, put them in the comments below. And I'd really appreciate your subscription and your thumbs up. And I'll see you in the next video. Take care.
I'm chasing that momentum, living the dream. Money on the line, it's a roll of the dice. Gotta hedge my bets on what'll suffice. From Forex to futures, every trade has a cost. Win or lose, you gotta learn who's boss.